We go one more time. Everybody is feeling fine. Hopefully it's a Friday. We have a lot of red on the screen, and this pullback today took a lot of us by surprise. We saw quite a meltdown in the stock market that actually started over the past day or two before today, Friday. And it looks like Ethereum and probably Chainlink and some other coins have suffered the most out of all of these. So where are we standing right now? We were looking for a bit of a pullback, possibly as a nested second wave, and we're looking for a tear back up the other way to confirm that we have a 1-2-1-2 setup in place. So while that has invalidated in several coins, we're not seeing the same thing across every coin. Ethereum has actually hit a lower low today. We're going to look at that in just a second. We went well into the 1600 range, so we broke our May 12th low, but the same is not true for all the other coins. Bitcoin is still holding on to something. And meanwhile, the stock market has also cratered today. We broke our 5-wave impulsive setup, honestly, yesterday. And today we've dipped so low that we've actually broken any chance of a leading diagonal. So at this point, if we see a reversal, things might get interesting for how to play that. So we're going to start with Bitcoin. This is the 30-minute chart. And we had our 1-2-1-2 nested setup. It wasn't the cleanest 1-2-1-2. And well, we had a second wave down, and we're seemingly still in a correction. We haven't fully invalidated this yet because it won't invalidate until we break this alert line I have set here at 28,000. So watch for what happens when you look at the MACD. There is a divergence, so there are signs that we at least have a local bottom in place. Ethereum is the one that's been possibly catching everyone's eye. This one did actually invalidate its 1-2-1-2 setup, and because we have had a lower low, all of this blue is now invalidated on this chart. And here too, we have a bit of a divergence. So it looks like we at least have a local bottom in place. So is this a continuation of that pullback that we were finishing on May 12th? Sure. Is it done yet? That is yet to be seen. We don't have any clarity at the moment. If I had to make a projection, this fib extension is probably going to be the best I can do at the moment, which is based on this pullback here and the retrace. Although we could actually do the same thing if we build our Fibonacci extension from way up here, which is about 2170 down to about, what was that peak there? 1708. And if we show the retrace based on that, we're looking probably down towards the bottom of support, 1112, 1100, 1200, something in that range. We're going to look at the big picture chart just to take a look at what that really means for us in that coin. Bitcoin Cash, my usual proxy for the altcoins, it hasn't quite broken its lower low. We did break the 1-2-1-2 nested setup, but we haven't invalidated the entire upside setup just yet. If you guys recall, Bitcoin Cash had one of the earliest 5-wave rallies of any of the coins. So we have not technically invalidated the big 1-2. So I'm going to move the 2 down here, assuming that that is the bottom, but we don't have any clear indication yet that we have a bottom in place. And this red 1-2 may already be in play. We're going to see where that gets us. And I actually have projections down in this box way down here, possibly below $100. Let's see if we get a bounce first. And we're going to be looking for the same kind of thing in the stock market as well, which I'll touch on. Ethereum Classic, this one typically is one of the most explosive coins that I follow. And we didn't make it to that box overhead. That would have been a nice indicator that we're well on our way. And this 1-2-1-2 nest setup is definitely invalidated. That doesn't mean that we don't have the possibility that we still have a big 1-2 in place. So if I make that low that we hit today, that could be the bottom of the larger second wave, which would mean that this entire rally that topped on May 24th is a first wave impulse, with this being an A, B, C correction. This looks pretty credible. Again, it looks like an A, B wave and an ending diagonal for the C wave. It looks fine. It looks credible from an Elliott wave perspective. We even have a divergence forming. So that's a good sign we're getting close, but again, no immediate indication of a bottom. Litecoin pulled back hard today as well. Very similar situation. We didn't break the original low yet like we did in Ethereum, but we've been kind of going on our way. So this is DOT-USD. This actually looks a lot less scary than some of these other charts. We have our we hit a lower, well, I guess a second lower low. We didn't invalidate the low that we hit on May 12th. So our smaller 1-2-1-2 setup is broken. However, we could still count this entire thing as a 1-2 potentially. And of course, the red still lingers, which means that that could be a C wave top with more follow through to come. So that's what we're looking at with Dash. I'm actually going to delete these numerals because they're no longer relevant here. Chainlink, this was our hope, our bastion of hope as of a couple of days ago, where we had a very clean looking impulsive structure with nested setup, and it looked like we were cleanly in the third wave. However, we have broken our first support, which is at $8.24. That's the 0.764 support. So that tells us that we're not following a conventional impulsive third wave. And here, we're not seeing as much of a sign that we've finished bottoming in this pullback. We were, again, above 8.24 until relatively recently, but we're starting to pull back. So this whole thing could be a fake out ABC. And the scary part is that for C waves, you often see a 1-to-1, 1 to 1.236, or a 1.32 ratio of the C wave to the A wave. And we hit just past the 1.236. So this very convincingly could just be a three-wave fake out bounce, basically. If that's the case, well, we're going to see what the continuation is, possibly down the $4 range. We're going to touch on that on the big picture chart. Stellar, I just did a video on this. I know a lot of people were watching. This actually looks less problematic than most of these other charts, where we still have a 1-2, 1-2 in place. And because of how we truncated this potential red C wave, it could still be a nested 1-2 setup. So we haven't really lost the plot here yet. Even seen MACD divergence forming here. So this actually looks a lot better than a lot of the other coins do at the moment. So maybe that could be a sign of better things to come for this segment. And finally, EOS. This is the last one I'm going to do on the close-up charts. Again, we invalidate any sign, any chance of a nested 1-2, 1-2 setup because we invalidated that low from May 26th. Therefore, this still could be a large one and a larger second wave pullback. And we do see some signs of bottoming, divergence in the MACD. So we're going to see where we get with that. And this also has a target down possibly 96 cents, maybe 90 cents. Again, this is a linear chart. It projects differently from the big picture chart. So big picture, as promised, this is still, we do have some support below us. Bitcoin, like I said, if we break that 28K mark, we could visit the bottom of this purple box. We could go down to as low as 24.4, so 24,400 without breaking. I wouldn't even say breaking, but without, I guess, breaking the standard retrace that you'd expect for fourth wave. We still have plenty of cushion for this still to count as an impulse, because remember, by Elliott wave theory, if as long as the fourth wave does not overlap the top of the first wave, which in this case was 12,452, we still have an impulsive structure in place. Again, no matter how bad it feels, there is a chance we could hit 22,000. That is based on the A wave from the May 2021 high and the B wave bounce. We have projections between 22,000 and 18,000. We really don't want to break 18,000. More likely, maybe 22,000 is the bottom. But remember that ideal support is 24,400. That's Bitcoin. And you can see how it looks very corrective, the bounce. Ethereum has obviously broken down below what our below our high or below our low from May 12th. Here, our support, our major support is about 1151. I know I mentioned some really scary sounding numbers. 1172 could be a potential low if we do break through our 1598. That would be the 1-to-1 ratio of this A wave to the C wave. I know it's a little small to see on the chart, but that's what it looks like. And our MACD is actually curling back up. So that's a good sign still that a bottom may be near, but that's what you'd be looking out for, that we could see a spike down to 1598, maybe down to the next fib. I really don't think we're going to break 1174, but you never know. That's about as low as I would expect us to go. Here too, our first wave sits at about 489. So we have a long way to go before we break down any, we break down the overall 5-wave impulsive structure potential. Bitcoin Cash, we could go a little deeper into the box. Wouldn't be the nicest thing to see, but we have some cushion there. We could basically make a deeper fourth wave retrace without compromising anything. Ethereum Classic probably has more cushion than anything else. We didn't quite make it into our ideal retracement box, so it would not be shocking to see us make make another visit into that box. That would be the ideal retracement, 1425. We didn't quite hit it on during the big pullback several weeks ago, so could be a chance for that to happen. Litecoin, same kind of thing. We could actually get to the bottom of that box if we turn back down. Dash, getting pretty dang scary. Remember that $34 mark is important. Otherwise, we may have to reconsider the whole pattern. And the truth is, after reevaluating this, it would make more sense if this were just a big C wave, a continuation of the larger degree fourth wave. That would mean we'd have one more rally left, and it would actually make the analysis a little bit cleaner. So I'll be putting an update out on that relatively soon, just to go over that. Again, invalidating this major support is not necessarily a bad thing. I think I mentioned the same situation with EOS, which already has done so. We're going to take a look at that in a second. Chainlink, we broke below our ideal support, but because of the ambiguity of this pattern, we honestly could pull back a good bit more without invalidating the upside structure here. So I'll leave it at that with that. Stellar, went over this the other day. We just pierced the top of the box. We could easily dip lower without killing the overall pattern. And as promised, EOS, well, we already considered this entire pullback from May 2018 to now one continuous correction. So any lower doesn't really make much difference. It'll just change our projections for the upside. But that also means we probably have just one more rally left for our fifth wave before we get to our everything top. Now, I know it sounds absolutely ridiculous that I'm still calling for more rallying. Am I a perma bull? Not necessarily. We still do need to see a fifth wave in many of our assets. And well, the same kind of story is going for the stock market as well, where we've been having some trouble getting through resistance. This is the Dow. And here too, we had an A, B, C rally. That was from our bottom from May 20th. And we looked like we were in a fourth wave forever. And then we just had the floor fall out. So we didn't get our fifth wave up. So there is the looming possibility that this is possibly a first wave down. And we may have a lot deeper to go from here. If that is the case, this does have that look. We've been looking at this as more of a three-wave correction, but we would expect to see a second wave bounce, probably pretty deep, and then possibly the final spike down to finish things off. Again, the reason I'm pointing this out is because the stock market and cryptos have been correlating pretty closely the past several years. And if we're seeing much more of a downside setup for the stock market at the moment than arguably most of the cryptos at the moment. There's no real clear downside impulsive look, but here you could easily count that as maybe a 1, 2, maybe a 3, 4, possibly a fifth wave down. We didn't quite make it down, possibly a little bit lower. If that happens and we see a bounce, that would be a strong indication that we might have more to go, more downside ahead. So we might be getting close. On the bigger picture, that could indicate that we're not done with our bigger fourth wave. Like I mentioned in Bitcoin, we have the same kind of thing. In the Dow, we're looking at the fourth wave having been completed, but you see this red fourth wave that I have drawn here with the pink box below. Could be an indication that that correction that started in January, earlier this year, hasn't quite ended. And honestly, if this is the larger degree fourth wave correction within this entire structure off the March 2020 bottom, we would actually expect it to be deeper and longer than it's been. So this is actually really just, it's been the alternate count all along anyway. And as painful as it is, it makes it easier to analyze. It just means that we have one more rally left before we hit our ultimate top, likely in the back half of 2023. We're going to recalculate this based on the trend channel analysis. So again, I know it's painful. We're going to see if we have more downside action over the weekend. Maybe cryptos will run ahead and hit their lows before the stock market does, or they'll lag behind and the stock market will hit another lower low first. But either way, it's giving us a little bit of clarity, and it's not over until we see a 5-wave rally back up. So again, you want to see 5 waves up from wherever you hit, like so, and a 3-wave correction, and you want to get back beyond the top of your impulse. Until that happens, there's still the opportunity, or still the potential, we do go lower. And shouldn't be surprising to any of you if you guys have been following my channel. Yes, I've been looking for an upside rally, but we've had the red pattern just stubbornly sticking by, and it could still go down. So all I'm saying is that there's still not as much downside as it feels like. There's a lot of blood in the streets, but it may still be several more days or weeks before we start seeing some upside action. So I'm going to have plenty more updates coming our way. Don't panic. Till next time, thank you for watching and happy trading.